Hey everybody, this is Greg Gossett, and today is Sunday, June 5th, 2022, and thank you so much for coming and visiting me here today for the Gossett Trading and Mentoring Weekend Review. And I hope you're having a good week, or a good weekend. I hope you had a good trading week last week. And what we're going to do today, the format is, first of all, we are going to run the U.S. legal disclaimer. Secondly, we are going to come back. We're going to take a look at my current trades, both on the monthly, the daily, and the weekly time frames. As you know, one of my philosophies in trading is that I like to trade as many different types of time frames as possible, from the 1-minute chart, the 5-minute charts for intraday trading, all the way up to the daily, weeklies, and monthlies for some longer term. And the reason I do this is because what I have found over the last almost over 26 years of trading now is that generally all of my time frames don't fail. Last month had a record month day trading, thankful for that, but horrible month with swing trades. This month so far, not so great on day trading. I mean, profitable barely, but swing trades have done well. So, I get a lot of people that say, oh, hey, you had a record month last month day trading. Why don't you just day trade? Well, that's 1 month, right? I really believe that trading multiple time frames is the proper way to go. There's something called recency bias, which means that, if something happened in the past, you think that's going to continue to happen in the future. But after reflecting on that, I really do, from the bottom of my heart, believe that the best way is to spread your trades around different time frames, so that if one time frame is not working, hopefully the other one will, or multiple ones will. So just wanted to bring that up. I was thinking about that this morning before doing the podcast. I said, this is a good example for people listening to show how 1 month this time frame can do well, but the next month maybe not so well, and a different time frames will kick in. So, all right. So what we're going to do, we're going to go ahead. We're going to go through my daily swing positions, take a look at when I bought the position, why I bought the position, and how I am going to manage it going forward. Then we're going to take a look at the weekly trades that I have going on, monthly trades that I have going on, and we'll just get into all the nitty-gritty about what I'm doing with the trade. After that, we are going to talk a little bit about trader psychology. Very important, most important skill in trading. I say this every week, but I really do believe it, and that's why I do want to spend some time talk about trader psychology. Hopefully, it's helpful for you. It's always helpful for me to talk about it and teach it as well. Then we're going to switch over, do a little trading poem for my good friend Frank. And then I have gone down through my watch list, have marked some potential trades that might be interesting for me next week. When I do this, there are usually the price either has to go up from here or down from here. Sounds kind of ironic. Why don't you just buy it now? Well, the signal's not there yet. And usually they have to come down, or maybe they have to go up for a crossover, some kind of momentum trade, something like that. But I did identify some potentials for next week. And then we're also going to look at the markets in general, the SPY and the HUE, and we'll do a little analysis of that. So anyway, hopefully this is going to be helpful for you. I do have to run the U.S. legal disclaimer here, and so I'll be back in about 40 seconds. So hang tight. Thank you. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. All right, thanks for holding through that with me. Let's get started. Take a look at the first current open positions. This is Amazon. This is on a daily time frame. I did buy Amazon back here on the 24th of May. We really nailed the bottom on this one. Fortunately, what were the reasons that I entered the trade? Well, the main reason was an under 30, over 30 here. MACD was also positive. That's the reason it put me into the trade. I got in here at $2,090. Currently, it's $24.47. It's been a huge move up. The trigger was an under 30, over 30. Of course, I always place my emergency stop, which is 2 ATRs below my entry. I position size using the 2 ATR. I take generally, a good rule of thumb is 1% of your capital. So if you had a $100,000 account, 1% of that would be your maximum allowed loss on the trade. And I would take that hypothetical $1,000, or if you have $50,000, 1% is going to be 500. If you have 25,000, 1% is going to be 250. I divide it by the value of the 2 ATR. That shows me how many shares to buy based upon the current market volatility. It's very important to position size based upon market volatility. A lot of traders, even great traders, don't do this. So, let's just do an example here. Let's go with that $100,000 hypothetical account. 1% of that's $1,000. Take $1,000. What's the value of the 2 ATR? 225.25 divided by 225.25. If there was a signal, which there's not here, I'm just showing you the math, that would tell me to buy 4.4 shares. So essentially, I'd round down to 4 shares. If it moved 225.25, well, that would be the $1,000. So does that mean that I'm willing to risk $1,000 on every trade? Well, yeah, hypothetically it does, but in reality, only about 5% of the time am I going to hit my emergency stop. The other 5% of the time, I am going to hit my end of day stop, which would just be a close back under 30. So great trade. Of course, as always, I always play offense and defense with my trading. I position size correctly. I know where my maximum allowed losses or my emergency stop. I know where my end of day stop is. And that's defense. On the offensive side, as it moves up, I'm always going to take a portion of profits off as it moves up a certain amount. What is that amount? Well, it's very well defined. It's the value of 0.45 ATRs. You can see here on the screen, it's $50.68. So what does that look like in this particular trade for me for Monday? Well, look, the current price is $24.47, so 2,447. I'm going to add the value of the 0.45 ATR, which is 50.68 plus 50.68. That is going to be my first profit target for Monday, $24.97. Now, I'll take my first profit target, add the value of the 2 ATR or the 0.45 ATRs to it again, 50.68. So 24.9768 is my first profit target. I take the first profit target, add the 50.68 on there again. My second profit target will be 25.4836. Then I take my second profit target, 25.4836, add the value of the 0.45 ATR on there again. And then that will give me my third profit target. And I will take 10% of whatever remaining shares that I have off at the first profit target, off at this, another 10% at the second, the third at the third. Right? So that's how I do my profit targets to the upside. First of all, though, always want a position size based upon the current market volatility and your maximum allowed loss. That's your emergency stop. Know where your end of day stop. For me, it would have been a close under 30. I like to be as close to what my end of day stop is going to be. And if it moves up, great. I'm going to take partial profits along the way to mitigate potential big reversals down by locking in profits. When the market gives you something, I always want to take something. Orange line here is the 1.5 ATR trailing stop level. Once I reach that, now I go into a different trailing stop methodology. So bought here at 2090, a few days later got to my trailing stop level. Doesn't change anything, doesn't mean I sell anything. but it puts me in trailing stop mode. Once I'm in trailing stop mode, if I get a close below the previous day's low, I'm going to sell half of my position. Fortunately, this has been such a nice big run on Amazon, haven't had to do that. If we get up into the 70 RSI levels, then another trailing stop or exit strategy comes into place. If we get above the 65 RSI, then another trailing stop strategy comes into place. So not there yet, but you have to have if-then statements, everyone. If my trade does this, I'm going to do that. If it does that, I'm going to do this. So you have to always have a complete trading plan so that you know what you're going to do. You don't know what the market is going to do, but you have to know what the market will do. Interesting, I believe Amazon splits, a 20-to-1 split, so I think this is going to open up on Monday like $120, which will be kind of interesting. But this particular trade so far doing very well from entry to current price, up 14.43%. CCJ. All right, here we go. CCJ. Why did I buy CCJ? Well, I bought CCJ back at May 23rd, close under, close back over the 200-day moving average. Also took out a fractal. Fractal is a high with two lower highs to the left, two lower highs to the right. MACD was also positive. Those were the signals for the trade. Of course, I position size, place my emergency stop. My end of day stop is going to be a close below the 200-day moving average because that was the trigger of why I took it. Close under, close back over. Next day, intraday went below but was strong enough to close back above. Oh, sorry, that one moved. So I am in trailing stop mode on CCJ because you see how we got up to the 1.5 trailing stop level. So now if I get a close below the previous day's low, I will sell half. We have this big bar, big down bar over here. The price has got into the bar and stopped going up. Doesn't surprise me. Big bars down like this tend to have some Fibonacci resistance at about halfway of the bar, and if you go over here to the right, you can see that's exactly what happened. So this particular trade, entry to exit, up about 4.04%. I just want to add, the reason for this podcast, just kind of give you a high overview of what I'm doing, how I'm trading. If you would like to understand step by step exactly how I trade, I do teach a private one-on-one course in the evening time via Skype. So if you're interested, my email is in the link of this YouTube video. Send me an email. We can have a Skype call. Skype call's free. And you can ask me all the questions you want about the course. I'd like to ask you some questions about your trading, but it's a great course. I've taught people from all over the world, and I'll touch on this again at the end. But if you're interested, I am available, and I think you'll be happy that you took the course. So here on Cameco, currently up 4.04%. As with Amazon, as it moved up at least 0.45 ATRs, I took profits. So I've already taken profits on this particular trade because the market gave me some, not all, but just a percentage. So up 4.04%, been a nice swing trade week. Netflix. All right, I did buy Netflix back here on May 13th. What was the signal? Under 30, over 30. MACD was positive. That was the signal. Bought here 186.71. Of course, always have emergency stop. Where's my end of day stop? Well, I took it with an under 30, over 30. Therefore, my end of day stop just going to be a close back under 30. Got close here, but held. It's amazing how that 30 RSI can really hold, and it did. A few days ago, did hit trailing stop level, which is again 1.5 ATRs above entry. So I am in trailing stop mode. Now I'm just waiting for a close below the previous day's low. It's very important to be patient, wait for good trade setups, but it's also important to know how to get out. I spend most of my time working on my research on how to get out of a trade. Getting into the trade for me is very, very easy because it's very black and white, but getting out, I think that's the difference, is when you get out, how you deal with price action. And that's why I have all these rules that don't always work. Sometimes you get out and it goes roaring up and you wish you would have stayed in, but that's just life. So Netflix, nice trade here from entry to current price. Let's see. Right about there. 6.05%. So it's been a great trade, swing trade so far. Just looking for a close below the previous day's low to lock in half of whatever I have left. And it's not what I started with, right? I don't have as many shares as I started with because I took some profits here. Whenever I took some here, took some here, took 2 profit targets here. So anyway, this particular trade up 6.05%. Nice to have some winning trades finally on the swing trades. Last is SO. I bought SO back here, 516, 520 crossover, trigger of a fractal to the left-hand side. Emergency stop, of course. Where's my end of day stop? Well, the 5, I took the trade with the 5 crossing over the 20 EMA. If it closed back below, I would get out. It tried, it kissed, but it moved back up. Grateful for that. Of course, as it moves up, taking profits along the way. This particular trade currently from entry to current price up 0.82%. Okay, those are my open Apple trades. Sorry, my voice is a little weird today. I had a little bit of a cold this weekend, so bear with me. Apple, I did exit the rest of my Apple. Let me just take you through the trade. The trade I bought went long 5/20/22 was an under 30, over 30, plus a V1 entry trigger, rejection of the negative third ATR channel. Of course, position size, emergency stop, end of day stop would simply be a close back under the 30. Bought at 137.47. 1, 2, 3, 4, 5 days later, got to trailing stop level. Now I'm in trailing stop mode. Next day, however, I did get out of half of my position because we rejected the 50 RSI to the upside. We went up, went above 50, closed below. That is a signal for me to exit half of the position, not all, but half, because it is a bit of a red flag. Next day, went up. I thought, well, I guess I was wrong. I'm glad I still have half. Took some profits. Day after that, big, huge day up, took some more profits. And then on Friday, exited the second half of my Apple position because we had a close below the previous day's low. Remember, when you take a trade and you get to trailing stop level, doesn't mean you do anything immediately, but if after you reach the trailing stop level, if you get a close below the previous day's low, like here, right? Friday closed below Thursday's low. That was my signal to get out of the second half of the position. So the first half of the position locked in 7.77%. Second half of the position locked in 5.54%. So out of the trade, and was a really nice trade. Gold. All right. Well, gold didn't work out so hot tamale, but it was a small loss, and that's what's important. I did buy gold back here on the 25th of May. We closed nicely above the 200-day moving average. We came back down. We bounced. That's what I was looking for. Bought here at 173.01. Next day held the 200. Next day held the 200. Up here, orange line. What's that? Well, that's my 1.5 ATR trailing stop level, right? Day after that, we closed below the 200-day moving average. That was my signal to get out. So got in at 173.01, got out at 171.20 for a 1.11% loss. And then it just went racing right back up. Do I care about it? Not really. I mean, of course, I would have liked to. I think when you get out, from the human element, you'd kind of like it to go back down so you can go, oh, good, I got out the right time. But it doesn't always work. Sometimes you get out and it goes right back up, but that's just trading. Gold is on my list for this coming week, and I'll cover that in a little bit. But this particular trade did end in a loss of 1.11%. All right, let's head over to the weekly time frames. Remember, I like to trade different types of time frames. I think it evens out your results. It doesn't put all your eggs in one basket on one particular time frame. So I did buy IWM back here, 513. What was the signal? Signal was an intra-week rejection of the 200-week moving average. As always, what's my maximum allowed loss divided by the value of the 2 ATR? That's my emergency stop down here. Where is my end of week stop? And end of week means Friday, right? Because Friday bars close. Weekly bars close on Friday. Well, I took it because it intra-week rejected the 200-day moving average. A close below that would be my exit. Next week did go down during the week, but closed above, held above. Next week moved up nicely, took a profit target that we discussed before, right? 0.45. So I did take some off. Last week didn't do much. We're not to trailing stop level yet, but it is up, and the trade is up from entry to current price 5.04%. Not bad. Next open weekly trade is BABA. I did take BABA. Different signal here. This is not a deep dip buy. This is a higher low V1. Bought that on 527. V1 consists of two bars, bar 1, bar 2. Bar 2 goes under bar 1, closes above bar 1's close. Also closed into the value zone, which I liked. MACD was positive. So I bought this here at 93.03. It is 93.21, so it is technically up. Let's see, I'll get on a smaller time frame here so I can get the percentages better. Let's see. Oh, we'll do it this way. All right, so from entry to exit here, up 0.19%. So nothing to write home about. We did move up much higher in the week, and then we had the reversal, but no profit targets, but still up 0.19%. My stop on a V1 or a V2 is a close below halfway of the washout bar. The washout bar is in this particular case is the trigger bar. So that's why I have this red line here. If it closes below halfway of that, I'm going to get out of the trade. If during the week it's below, I don't do anything. It has to close there. But if it does close, that will be my indication for me to get out of the trade, because if you lose a 50% retracement to the downside, it's not such a great idea. But we'll see what happens. Slightly up on the trade. All right, Home Depot. Well, Home Depot, I did take on the monthly chart. So if this one trends, I could be in this for 3, 4, 5, 6 months. You never know, right? But if I'm wrong, I'm going to get out wrong quickly. The reason I took this trade was because it's such a great example, a teaching example of one of my favorite setups, which is called a return to value V1 or V2, or in other words, mean reversion. Here on Home Depot, we had a nice, big, strong move up way above the value zone. MACD was very strong. Well, then we had the pullback in the market back in the value zone. The value zone is between this green line and this green line. Anywhere in there is considered the value zone. This is a picture perfect trade. We're above the value zone. I don't want to buy above value. I want to buy in value, sell above value. I want to buy below value, sell in value. A lot of traders do the opposite. They buy these momentums above value, and then when it gets back into value, they probably hit their stop and they have to get out. It just doesn't make sense. It makes sense to buy in value, sell above value. Buy below value, sell in value. Does that make sense? So this is exactly what happened. I had to be patient. It moved up way above value, came down into value zone, but what I was really looking for was this sideways motion. I wanted to make sure that there were buyers in here to support this for hopefully a run back up, but we'll see. But above value into the value zone, I want 2 bars of sideways motion. Well, here's 1, here's 2, here's the trigger. This is the V1 scenario that I was telling you about. Again, this is something that I teach in my lessons. V1s, V2s are a big part of my trading, really the bread and butter of my trade. I messed up on this trade. I thought it was the last day of the month, and there was not, so I bought it a little early. Bought it at 307.47. It's 305.81, so it is slightly down on the trade, but same process. Take my maximum allowed loss based upon my situation and my trading account divided by the value of the 2 ATR. That shows me how many shares to buy. It also shows me how many points below my entry to put my stop, right? It's going to be $70.50 from my entry price way down here. Do I most likely have to hold it down there? Well, hopefully not. 95% of the time my end of well, in this case, end of month stop is going to come in, and this is just simply the same as we looked at BABA. This is a V1. If I get a close at the end of the month below halfway of this bar, that will be my signal to get out. Of course, I have to have my emergency stop down here in case it all hits the fan. But if it gets down there, from a percentage wise, this is going to be massive, right? This is going to be a 22.74% loss price wise, but it's going to be a 22.74% loss for my account? No, right? Because, you know, in that hypothetical, what I was talking about, the position sizing, the maximum allowed loss is going to be 1% of your account. So it moves 22.74%. That sounds horrible, but in reality, if you position size correctly this way, you will only lose 1% of your account. I actually trade lower than that. I only risk about 0.5% on any one account. So if this moved 22.74% to the downside, in reality, I would only lose half of 1% of my account. So that's the trade. Return to value, sideways motion, V1, emergency stop, end of day stop is end of month stop is a close below halfway the washout bar. Have my trailing stop level up here in case it trends, and then of course I will place my profit targets, which I'll just take the closing price. I'll add 0.45 ATR. 0.45 ATR is going to be very large on this, is because this is a monthly trade. But you know, if we go back to the end of the month, just to give you an example, just hopefully to make this helpful. So this is the end of the month. I took the trade. Take the closing price 300.85. Add the value of the 0.45 onto it. 1616 at this point. 16. My first profit target is going to be 317.01. Add the 0.45 onto it again. 16.16. 333.17 is my second profit target. Third profit target, take the second profit target, add the value again. 16. Third profit's going to be 349.33. Profit targets on monthlies and weeklies are way up there, so don't expect to hit them very quickly, but if you do, boy, you've done pretty well. So, and I have these in my system. The numbers I just told you, I have them in my system. 10% at the first profit target, 10% at the second profit, 10% at the third profit target, and put those in there good till canceled, right? Because daily, just a day order is going to be, it's going to come off at the end of the day. So for weeklies, monthlies, I always put my limit orders in as good till canceled. So this particular trade is down a little bit, not too much. Let's see if I can catch the numbers here. All right, here we go. Let's see. So entry down here. This one's down 0.77%. So not too bad. So the winning trades have been up some double digits. Losing trades down slightly. Right? We don't know what's going to happen. That's just at the moment. But that's really the key to profitable trading, everyone. Letting those winners run. Getting some double digits trades are nice, but when you're wrong, you have to be wrong quickly. Get out quickly. So that is Home Depot. So those are the trades on the daily opens, the daily close, the weekly open, the two weekly opens, and then the monthly close. So let's head over, talk a little bit about trader psychology. I've been pulling a lot from this channel here on Twitter. It's a really great channel, The Divergent Trader at Trader Divergent. Please go support this channel. He puts out good information, really nice, succinct trading words of wisdom that I think are very helpful. I really like this trade. I really like this post. Discipline and habits will take you places that motivation can't. So motivation, you know about motivation. You get all pumped up. You get all, maybe you go to some kind of seminar or something like that. And yeah, it gets you all pumped up and the motivation's there. And maybe you are, going out doing what you're supposed to do, getting to the gym or whatever it is that you're trying to accomplish. But after a few days, that motivation kind of runs out, right? It kind of lets the gas out of the tank. And that's the reason he's saying this. Discipline and habits will take you places motivation can't. Motivation is just a quick little thing, but it's not long lasting. In order to be long lasting with your goals and your approaches, you have to have discipline and habits. Habits, super important. It takes about 30 days to create a real habit, whether that's going to the gym for 30 days, trading for 30 days, doing yoga for 30 days, whatever it is. After about 30 days, it's going to become a habit. And habits are much more powerful than motivation. Motivation is not long lasting. Habit is long lasting. So my advice to you would be trade correctly for 30 days. Follow your stops. Follow your process. Do everything that you're supposed to do. If you do that for 30 days, it will become a habit, and habits are hard to break. And having good habits are good because they are hard to break. Bad habits, also hard to break, not so good, not so hot tamale. And of course, discipline, right? But they go hand in hand. You have to have the discipline and the habits. Make discipline a habit of yours, and that is what's going to get you through things long term, is creating a habit of good trading and being disciplined. Motivation, short-lived. You have to develop the good habits. So follow your process, develop the good habits, develop the habit of discipline. That's also a habit, and that will help your trading. So thank you, the Divergent Trader, at Trader Divergent. Please show him a little love. Go and follow, support his channel over on Twitter. All right, so before we get to the potential trades that I'm interested in, let's quickly go over, this is my good friend Frank, the trading poet. You can follow him at FrancoD. He's a great guy, great trader, great musician, great poet, and I love how his poems are always pertinent to what's going on in the market. Follow him at FrancoD. He writes a poem every day, and they're fun. There's no telling what challenges we may face. Trading, like everything, has its place. Some reach for the stars while others struggle to keep pace. Markets can really define the rat race. Prepare for anything, just in case. A lot of nuggets of truth in this poem. There's no telling what challenges we may face, especially with trading. We never know. Trading, like everything, has its place. Correct. Some reach for the stars while others struggle to keep pace. Markets can really define the rat race. Prepare for anything, just in case. Great poem, Frank. Thank you. Appreciate that. Hope you're doing well. Please follow Frank at FrancoD. All right, so not a lot of setups this week for me. Some potentials for next week, but we had that big rally off the bottom, well under the value zone. We're back in the value zone. Always a little bit of a tricky situation where we're at now. Generally, we get back in the value zone, we consolidate, maybe a leg higher, or we consolidate maybe a leg lower, but a difficult spot of where we're in right now. So I don't have a lot of potentials for next week because of the strange little location we're in, but let's go through what I have. So Berkshire Hathaway, nothing, I'm not interested in Berkshire Hathaway right now, but look, we were below the value zone. There was a nice under 30 over 30 that could have been taken there. So nice deep dip buy. We came into the value zone. This is where I expected things to pull back. We got right there to the 1 ATR channel. It's exactly where it pegged and moved back down. Not surprising whatsoever. People that bought and were fortunate enough to buy down here as it moves up here, they would keep it as long as it kept moving up. But it stopped moving up, started to go sideways, started to go down. So the people that really bought this low are going to be taking some profits when it starts getting a little weak, and that's exactly what happened. Now, what I'm looking for next week would be an intraday rejection of the 200-day moving average, a close under, close back over the 200-day moving average, or a bounce at the 200. If it doesn't hold there, I might look at the 250. I also might look here at the 300-day moving average. I would really love to see Berkshire come back down here, because not only would I be able to buy a nice deeper discount, especially at like the 300-day moving average, I would also have a double bottom with the bullish divergence. What that means is this first leg of the down move had very strong downside momentum. That's why these bars are so red and deep. Well, now we rally into green bars. But if we could come back down, test this low, I already know just from experience with we're working with MACD, we would have very little red here, even if we came down and tested this low. And so we would have a low with very deep red MACD bars, then we would have another low at the same level of lowness. I think I've ever mentioned that in my life, the level of lowness, but that's what it would be. But the MACD bars there would be divergence. There would be a bullish divergence, meaning the second move down did not come on the strength of the momentum of the first move. And the implication of that would be is that we're running out of sellers because it's a momentum indicator. We're running out of sellers and we would reverse back up. So when I look at this, there's a lot of potential for next week. First one would be looking for a rejection of the 200-day moving average. If that doesn't hold, 250 would get my attention. If that doesn't hold, the 300-day moving average, the orange line, would get my attention. So that's what I'm looking for on Berkshire. Really nothing to the upside, looking for a pullback, good risk to reward ratio. Concert, oh, you know what? Let me, I forgot to put this up. Hopefully, oops, sorry about that. Hopefully, this has been an interesting company here. I just read some news on Concert Pharmaceutical, I don't know, a week ago. So they're a pharmaceutical company that's developed this potential drug for people that are bald. An experimental treatment from Concert Pharma for a severe form of hair loss called alopecia could restore a nearly full head of hair in up to 40% of people, the company said. I mean, look at these pictures. My gosh. Like, look at this. Started growing back. Does it work? I mean, they're a pharmaceutical company. They are getting national coverage on this. That's pretty amazing. So I did look up the stock, and look at this stock. My gosh, we consolidated nicely sideways. The news came out. I mean, we ran from 330 up to 674. The stock more than doubled. Had some nice trade in here on this first pullback on a day trade, but from a daily swing trade perspective, I would really like to see, we're back in the value zone. We always come back to the value zone, right? Do you want to buy up here, sell in the value zone? No, I want to buy in the value zone, sell up there. Don't know if it's going to rally. A lot of gaps here possibly to be filled, but what I'm really looking for, don't know if it's going to happen this week. We could reverse, turn right back up. I like this level here, 366, because this was the previous resistance. We broke through it. It should act as support to the downside, but a more clear line in the sand would be if we came back and tested the 200-day moving average. That would be a good risk to reward ratio. We'd be back in support. Don't know if that's going to happen. Another alternative would be that we continue to move sideways in the value zone. Then I would look for a V1 or a V2 entry. But for the purposes of this podcast and the key real level, the easier level would be looking for a pullback to the 200-day moving average. Walt Disney, well, I am looking for a 520 cross on Walt Disney. The 5 EMA is currently 108.87. The 20 is 108.96. If the 5 were to be able to close above the 20-day moving average, that would be a crossover after sideways motion in the value zone. So that's what I'm looking for Walt Disney, is a 520 cross back over. Gold, of course, I had the trade gold, had that losing trade on gold, but we had a pullback on Friday, looking for another intraday rejection of the 200-day moving average, or a bounce, or alternatively a close under, close back over. So that's what I'm looking for on gold. If it moves up, a 520 EMA crossover would be a buy side signal to the upside. Don't know if that's going to happen. If it does, I'll just have to see where it is when it triggers. I prefer to take 520 crossovers in the value zone. But what I'm kind of expecting is some follow through selling, looking for a bounce, some kind of bounce and rejection of the 200-day moving average, or the 250 or the 300 as well. Google. Well, we did have a 520 crossover on Google on Friday. I had quite a few positions, and I had some tech, didn't want to take additional positions. But next week, if I get a 520 cross under and then a 520 cross back over, that's what I will be looking for on Google. MasterCard. Okay. Oh, you know what? Let me Sorry, I should have prepared for this before, and it just crossed my mind. Let me get this because I want to share a link with you. ITC. Oh my gosh. ITC, let's see. I am really sorry here, folks. I thought that I had this all taken care of previous, and it looks like I did not. So, oh my gosh, I really apologize. ICT. All right, so let's do this, and then let's get this. Good. I really wanted to share this with you. All right, so I'll put that up for you there, and we'll get to that in just a second. But MasterCard, this has held up quite well, even with the sell-off here. Looking for some kind of rejection at the 200-day moving average. So that's what I'm looking for. It could just head back up, but if I had a nice rejection there, the 200-day moving average, it gave me a good risk to reward ratio. That's what I'd be interested in. Okay. QQQs. What's interesting about Qs, I don't really see a signal here right now. We did have a 520 crossover, which is legitimate. Of course, we had the big pullback again on Friday. If we could get a 520 close under and then back over, I would be very interested in taking that. That's a good back-tested signal. But the reason I put the Qs up here is I wanted to show you what's called a market structure change. We had a low, we had a rally, which becomes a pivot. We have a lower low, and then we took out that high. Well, that places us into a bullish market structure. After you have a bullish market structure change, I'm looking for pullbacks. And what I'm looking for pullbacks here, and this is something that I've learned over the last few months that I was informed by my trading partner Ava, who has been following this channel on YouTube, and I want to share it with you. The channel is called The Inner Circle Trader. ICT is the name, and he uses something called fair value gaps. You can watch his videos here. He has great videos, and this is a strong trading approach. I've been watching it and have become a believer over the last few months because, one, Ava told me about it, and I believe what Ava says because she is such a great trader. But there's like 37 videos here. If you're interested in this fair value gap trading, I would just do it simple. Just go down to number 1, introduction, and just watch it. But videos number 3, 6, and 9 are the ones that I watch most often. And, you know, listen, I teach you what I know, but when I learn something new, I want to share it with you. But the Inner Circle Trader, Mike over at ICT, watch those videos. They're going to be helpful for you. I just want everyone to be the best traders they can be. It doesn't have to be me that's teaching it, right? I just want everyone to succeed. So do yourself a favor, head on over to the Inner Circle Trader, ICT, over on YouTube, and take a look because these videos are great. So back to the structure change on the Qs. Well, there's a gap. I'm not going to go into this. You can watch the videos, but you see this big gap here between this bar's high and this bar's low. Inside here is a gap. Well, you know, in a nutshell, ICT teaches when you have a run on liquidity, you have a market structure change to the upside by the pullback that's inside this gap. I'm not going to point out, you know, exactly how I do it, levels. Please watch the video so he can show you where you place the stops. But anyway, I'm looking for buying the Qs in this area next week. And but do yourself a favor, watch the ICT video, Google them, or go to YouTube, Google them. But I guess the point in really showing you this is that I like that we had the market structure to the break, to the upside, and you know what's the old wisdom? Buy dips in an uptrend, sell rips in a downtrend. Well, last week we did, from an ICT perspective, get into an uptrend. Now looking to buy the value gap in here somewhere because we switched trends to the upside from ICT standpoint and looking to buy the dip. So from, I guess what I'm saying from a bullish standpoint, We may head back down, but I do feel like there is going to be support in this area. Of course, I have to put my emergency stop, all that kind of stuff always as well. Same with S&P. Made a low, rally, lower low, market structure change. Here's the value gap. Looking in here to look for buying the dip after the market structure change to the upside. But watch the videos so he can go over, how he put stops and so forth and profit targets. There's a lot to it. Too much to just do in this review. Okay, Tesla. I would love for Tesla to come back down and test the lows. What we would have is a confluence of signals. We would have a double bottom with the bullish divergence, because I know MACD will not be as low. So this double bottom, bullish divergence, and hopefully we could also get with a 30 RSI level. If we got down to these lows, we'd be back in the 30 RSI realm. That's a confluence combination of signals, which I really like, right? Always look for confluences, combinations of different signals lining up at the same spot improves your risk dramatically, or improves the chances of having a profitable trade dramatically. And then VIX. Well, VIX has had quite the sell-off. But I would be interested in adding some protection with some VIX if next week we've had a big move down. I would anticipate a little bit of a rally here depending what the market does. We're at 34.58 RSI. I would be looking for a combination of an under 30, over 30 at the same time we have a rejection of the negative third ATR channel. 92% of prices tend to stop going down at the negative third ATR channel. So from an edge perspective, that gets my attention, but then I also need a trigger, and the trigger for me would be an under 30, over 30. So that is what I am looking at. So I hope this was helpful, everyone. I hope you had a good trading week last week. Finally got a little wind in your sails. Friday was a little rude after the big rally on Thursday to come right back down. But at least on the Qs and the SPYs, we are, in my opinion, from an ITC perspective, we've changed things to an uptrend opinion. Don't be surprised if we have a pullback, but I will be buying that pullback. So I hope you have a great rest of your weekend. I hope you stay safe. Go out, do something positive for yourself. Go out, try to do something positive and nice and caring for another human being today. Try to do one nice thing every day. It will make a lot of people's lives better. It would make the world a better place. It will be helpful for you. Try to also go out and do something for an animal today if you don't mind. They appreciate acts of kindness as well. So appreciate you being here. Hope you have a good trading week next week. Be good. Be safe. If you have any questions or comments, leave them down below. And also, like I mentioned earlier, I do teach private one-on-one lessons in the evening time via Skype. I teach a great course. I teach you all 5 of the different trading approaches that I use. If you take this course, you're going to be a better trader. It does cost $1,750, but it's worth every penny. I promise you. I've had so many good reviews from my students around the world. And so if you're interested, just send me an email. The email is in the link of this description. I'll reply, say, how you doing? Let's set up a Skype call. The Skype call is free. It is not a sales call. I just want to learn more about you, your trading. It's a great time for you to ask me questions about the course. And after the Skype call, take as much time as you want. If you wake up one day and you say, hey, today is the day that I want to start doing these lessons with Greg, just email me back. We'll get it set up. Secondly, I also have a great online video course over at udemy.com. The link is in the description of the video. It only costs between $12 and $15, but don't let the low price fool you. There's tons of content there. You can see we've had some really nice trades from the deep dip buy signals that we've had last week, and that is what I teach in the course. So it's 9.5 hours of video, 26 videos total. It's a great place, especially if you're just starting to trade, and it's affordable. So do it. You're going to enjoy it. And then lastly, if you like today's podcast, I would appreciate it if you could hit the thumbs up button. Just lets YouTube know there's some valuable content here and helps keep the channel going. So if you wouldn't mind, I would appreciate it. But again, have a great weekend, everyone. If you have comments, questions, leave them in the comments below, and do my very best to get to them. So appreciate you being here, and hopefully talk to you next week. So on the way out, I have to run the U.S. legal disclaimer. Take care, everyone. Have a good one. Bye-bye. U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.